Office space has been hit hard by the impact of rising rates, tightening credit, pandemic work trends. But if you look past the office, my next guest sees opportunity in REITs right now, especially in gaming, housing, and retail. And he's bringing his top name in each category you're looking at him. Joining me now is Haendel Juste, senior retail analyst at Mizuho. Haendel, it's great to see you again. Welcome.
Good afternoon. Thanks for having me.
So this is really an area where I think there's an effort to tell everyone it's not all just about office. Tell us in gaming in particular what's going on right now, because I thought I saw a deceleration in some of the Vegas numbers lately.
Well, just stepping back for a minute, we just want to set the table here for a second. You know, the REIT sector here, look, it's been a choppy year, right? The shifting macro, recession risks, tighter access to capital, slowing growth, all on the list of concerns. The stocks are up about 5% year to date, lagging the S&P by about 1,000 basis points. But there is significant dispersion in performance. There's certain sectors like single-family rental, data centers that are up almost 20%, while office is down over 10%. So I think the valuation for this sector generally screens attractive relative to long-term averages and versus private market values. But, you know, it's important to be selective. You know, we favor names with better quality assets, tenants, balance sheets, especially in this higher rates for longer backdrop. So gaming is one of the sectors we like, single-family rental, residential broadly, but happy to get into those now.
On gaming, and a hat tip to those who guessed this correctly on Twitter, is it Vici, V-I-C-I? This is the REIT you like. There's a Bellagio angle here. Tell me about it.
Sure. You know, we like the gaming sector, and Vici specifically. Look, these are the landlords of the casinos. Vici's our top pick, the highest quality portfolio amongst gaming landlords. They spun out of Caesars, acquired the MGM casino portfolio a few years back. And there's structural benefits, CPI, linked contractual rent bumps, tailwinds that you pointed out, tourism in Vegas, gaming revenues are growing. Vegas is packed the last several times I've been there. It's just amazing how many folks are there. And there's very strong alignment with local governments. And you have stocks here like Vici trading at discounts to leading REITs and other subsectors, but with a far better growth profile. So we like the structural security, the growth, the relative value, and think that certainly, you know, a potential transaction, including the Bellagio, far from certain, nothing's been announced. It was popped up in a few news articles last week, would be additive and add to their sector-leading portfolio in terms of their dominance on the strip and quality.
Yeah, if apparently Blackstone might sell half of its stake, Vici would be the natural buyer. Let's move away from the strip and talk about apartments more broadly, where this has been an area that for the last couple of years, a lot of different people, whether we talk to bank CEOs or some REIT analysts, they've been positive. Lately, I'm hearing a little bit more caution on the multifamily side. Oversupply, stalling rent growth, that kind of thing. What name here? I mean, is it AIRC? And why do you want to be in this area right now?
Absolutely. In residential, so let's talk about two subsectors briefly. One, the apartment side, and you're right, we like Apartment Investment Realty Corp, AIRC. They own a broad national diversified portfolio, also diversified by price point, A and B. They have some exposure to the Sun Belt, but again, more broad regional exposure, which gives them some offset to the growing supply that we're seeing now starting to pick up in the Sun Belt, which will be a key theme in the Sun Belt over the next year. The landlords in residential have had pretty decent pricing power, but we're getting to the end of the summer, and you know, seasonally, this is a time of year where rent growth starts slowing a little bit, so seasonality starts to take hold. There's some talk about, you know, affordability. Rents have been going up for several years, how much higher. But when you step across the spectrum and think about housing, and part of the reason we like another subsector of residential, single-family rental, the affordability is really stretched. Home mortgages are now well above 6%. There's a millennial demand tailwind, undersupply of housing. So this all accrues to the benefit of single-family rental landlords like American Homes for Rent, a large mega-cap REIT, and Tricon, a more niche, smaller cap name. They have pricing power, external growth opportunities, and really a better growth story here over the next year, and not facing the same supply headwind that apartments are generally.
Yeah, going back to Vici, $34 price target there, although the price has been only a couple dollars shy of that. On AIRC, a $40 price target. On Agree, which you mentioned, about a $70 price target. These are somewhat conservative. Why is that relative to where these companies are currently trading?
Sure, I think there still is a lot of, you know, uncertainty out there. Obviously, there's concerns about a slowing macro, concerns about the consumer, some tenants. Obviously, access to capital has been very selective here, and you know, we think that it's important to discern between the subsectors of real estate. You know, office is facing a lengthy set of challenges. The access to capital is far more challenging. Demand is a big question mark. Clearly, the hybrid work from home is going to be a continued headwind for office over the next couple of years, but not all real estate is office. Obviously, the headlines are interesting in office land, but we think names like the ones I just outlined, along with Agree. Agree Realty, ADC, a name that focuses on high-quality single-tenant leases with I-grade leading tenants like Walgreens, Walmart, Publix, can also be net winners in the current macro. Portfolios and balance sheets set up to play both offense and defense. And so I think picking names like that in this type of backdrop, selectivity, again, is something we emphasize.
Yeah.
But names that share those attributes we think will be net winners.
All right, Haendel, thanks for your time today. We appreciate it.